Hey, how's it going, guys? Welcome back to mentfx. And right now, I want to talk about something that I don't think a lot of you understand is one of the best things about being a smart money, retail-based, whatever you want to call us, trader in this market, and why it's actually very, very cool that we're learning this specific way of viewing the market. Now, as a lot of you know and understand, smart money or institutions, whatever you want to call them, can see the orders in the market, right? So if there are people selling at certain areas, a lot of the time they can see where those stop losses are. And honestly, we can too, right? We know that above many swing highs and swing lows in the market, there are people that more likely than not have trailed stops of some sort, right? Or have more entries available to them, right? Trailed stops. People have gotten into buys here or trailing stops here. They're getting into buys and trailing stops here. Now, even though institutions can't do that, right? And they can see that number straight up, what's cool is if we can do the exact same thing on our end with institutional orders. Okay, so this is where it gets relatively interesting. This is where the game kind of begins to be played. Even though institutions can see the orders that are laying in this market all the way through, right, we can also see their orders on behalf of when they move price too quickly, when they bought to sell too hard, and which areas they need to mitigate from, right? It's a leveled playing field in that sense. The only thing that's not leveled is emotions. They have so much money that their emotions don't matter. They could have the shittiest psychology, but due to the fact that they have a whole shitload of money, they can stabilize relatively quickly. We have much smaller banks, much smaller accounts. So a lot of the time, if we are to lose big, and that's just how it is. It's just unfortunate for us that way, right? But the cool thing about what we do and the way we get involved in this market, I'm just trying to find something which I haven't completely ruined with my paintbrush. But the cool thing about what we do in this market and when we operate in this market is that the same way that they can see everything that happened to us, we can see everything that they are doing, right? So when we see equal lows or something of this nature, and we see this move down through the lows, this continuation higher, and again, new structure being put in, right, on behalf of institutions, we know that to do this, they had to sacrifice a ton of capital when they sold to buy here. And because of that, we're able to see how they left behind inefficiencies and how they move the market. It's a leveled playing field. Do not think that it isn't, right? They do have a lot more money than us, but we also have as much, if not more, information than them. Not only can we see the orders that we are placing in the market and other people are placing in the market by looking at the actual candles and the swings of them, right? Understanding that above this swing, there are stops and buy stops, right? We know below here are stops and buy stops. We know below here are stops and buy stops, stops and buy stops, stops and buy stops, so on and so forth. When we see liquidations of those areas, we know exactly what's going on. We know how orders are being taken. However, we don't know exactly how we're going to move from that area always, and we don't know how exactly or where we're going to get involved, which is why we can still be tricked sometimes as well. That's very normal and that's part of the game. But what's awesome is when they do have these large sell to buys and they begin to take out people, right, at certain lows, take them out and continue to new highs and begin to show you their hand, what's also happening is they're leaving behind those new areas of supply and demand, which will have orders in them that they need to mitigate, right? Now, when they mitigate those mitigated orders could be really quick and they could just continue lower. But on other hands, they could be relatively large and they could be part of a new substantial move higher, right? Which will be part and met with new liquidations and new entries at tests of the Wyckoff schematic and new demand zones, right? The same thing that we've spoken about on this channel multiple times. Now, what's beautiful about this is we are playing the same game as them. We know when they move the price too hard. We know when they left behind a big inefficiency. We know when and how they might have to fill that inefficiency in the future. We know how when they get there, they might have to manipulate price before they come in to take a certain inefficiency to move higher to new supply zones, to move lower, to then continue higher. We can see the plays before they happen, but what's hard and what gets a little bit confusing for a lot of smart money is differentiating between the fact that just because an area exists does not mean the play has to happen. Because just like this area here exists, so does the area here. So does the area here. So does, on a higher time frame, the area here. So does the area here. So does the area here, right? All of these areas are perfectly valid for mitigations on behalf of smart money because they've left behind these areas due to the way that they buy and sell in the market, which is liquidations and tons of money being sent into the market, right? And as a result, they have negative positions that exist in many areas and inefficiencies that they need to fill in many areas. So we use those footprints to anticipate how price may move. Now, again, as you can see here, even just as a quick example, I have this expectation, and I'm actually in the sell right now. It's already a break even and I've already partialed, so I'm just waiting on this to play out. But the expectation for me is to see this drop into here, the liquidation of all these people here, the drop back into these lower prices, and continuation higher. Now, this might or might not happen, but it's fine. If this was to take off and go higher right now, what I end up looking for is retracements on this buy to be a part of this as it gets in these areas and begin to see the transfer of what? Those weak hands into strong hands again, look for the shifts and look for it to continue going in a given direction, to come to new areas where they need to mitigate certain orders and liquidate other people, and potentially, even if that is not the case and they need to go even lower, to continue to completely new lows in certain areas, which is why you can see that I have a multi-level analysis on this from multiple time frames, understanding that price can move between every single one of these areas back and forth, because just like they can see our orders and take any one of those orders at a single time that they basically feel like taking, we can see their inefficiencies and their areas that they need to mitigate, and we can be a potential participant at those areas if we understand how to wait and look for them to happen, right? So take a look at the video before this, where we basically spoke about the fact that we need to see smart money show us their interest, which is that transfer of the weak hands into the strong hands, right? And because they need to do this, we can use that knowledge to basically help us understand how they're going to, one, fill a given inefficiency and mitigate given areas of supply and demand, okay? So what we're able to do is when we look at an area like this, just like they can see all our orders that are laying in the market, we can see the orders that they need to take out. So when we know that they're taking out our orders or other people's orders, and we also know that they're coming into an area to mitigate their own, and they're liquidating certain things, then we know how to be involved. So what I mean by that is, let's go to Euro US dollar for just a second. So go to the monthly chart, just because there was a lot of stuff back here that we can work with, right? Understanding that back here, back in the month of November in 2009, when they had this buy to sell, we knew that in the future, they had to make their way back up here to more likely than not mitigate the orders that they had to buy to sell into before either delivering prices completely higher to new highs or to continue lower, which means that all the way from this specific point here, which they have to do the exact same thing at, we could have been a buyer all the way up. And if you went and studied the price action here on the way up, even on a monthly chart, you can see how we left behind the same type of things. We left behind the last sells to buys, sells to buys, sells to buys, over and over again until that area was reached. And even when that area was actually finally reached, right? So let's actually go out here and zoom in on this again. We can see exactly how, when we got there, we began to create the same thing. We began to liquidate orders, liquidate orders, liquidate orders, final liquidations, continuations, mitigations, 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 continuations, mitigations, continuations, right? What's actually going on is we're using their own concepts for liquidating us against them for getting back in with them, okay? Because they have to do They basically have to do one thing to liquidate us, and that one thing is what we are going to use to get back in with them if we understand how to execute patience and how to watch this transfer actually occur in the market, okay? So let's look at another example of this just very quickly. Let's go to monthly chart here. Zoom out, zoom over here, right? Let's use this area right here. So as you can see, back in whenever the fuck this was, 2006, and we had this overall structural break to the top side, showing us that structure was more likely than not going to keep going higher. We knew that to do this, we left behind areas of sells to buys as well as inefficiencies, right? So on a higher time frame, this might be another area, but overall, you can see that imbalance from this wick to this wick. If you haven't seen my imbalance video, go watch that. At the time of, you can see that it actually was from this wick to this wick, and it already had some mitigation in there, which on a lower time frame might already be some Wyckoff. Again, transfer of the weak to the strong and the real continuation. So that's going to happen everywhere. It's fractal. It occurs absolutely everywhere. But on top of that, this new inefficiency that was left behind now is what was being filled here. And similarly, because we know that these zones have orders in them that need to be mitigated and also need to be closed in for fair value for the sell side and the buy side of this overall market, we can use that to our advantage to see how they're going to do it, and not only how they're going to be doing it, but also how we can potentially be involved with them as they do it. Okay, so in this specific case, it might have been a little harder, but if you actually study what occurred here, right, price came into these areas by doing what? Coming in relatively sharply, nothing really to see, right? Played in or around these areas for a while. Now, if you were on a lower time frame, you might have seen the accumulation in here on like an hourly or 4-hour chart, and then was able to get on this test and take it much higher. Now, as we got those higher prices, notice where they ran to, right? Always ask yourself, where are prices running to? They ran to fill the inefficiencies that lay here, and to mitigate the orders that were inside of this last buy to sell, right? The last buy to sell candle, and that's what was closed. Now, as that was closed, what did it leave behind again? Well, it left behind a ton of inefficiencies here that need to be filled back in. So as a result, price then came all the way back down. And because we were aware of the fact that we needed to fill this overall from the beginning, and we filled some of it just now, and now we're moving higher, we know that more likely than not, the strong hands have created a big, like basically a shitload of buy orders that they've placed into the market in all these areas. From the liquidation of all the retail, the dumb hands, the weak hands, the liquidation of all those people, and basically this overall accumulation allowed them to accumulate a shit ton of buy orders. So when they took those buy orders higher, they were able to close a lot of them here, and a lot in here for profit. However, there's still a lot of buy orders because they had a bigger long-term prerogative to go even higher. So as a result, when they came back down, they weren't done with their buy orders because we've already started a large accumulation. So instead of just breaking down right through it, we began to undergo the same thing. We began to put in lows, liquidate them, lows, liquidate them, lows, final liquidations, the moves away, showing you the exact same thing you saw here occurring here. And again, you have the moves right back down to fill in the last sell to buy candles, right? And you can see that on lower time frames if you go and study that before the real move up began to occur. This is how you, one, let them show you their interest, and two, basically use their own tactics against them. Watch how they liquidate people and see how they do it to see where they're going to come and mitigate in the future. See how they've liquidated in the past and what they've created in the past to then, of course, also understand what they might do down the line in the future. If we go back to Euro US dollar, right here on the monthly chart, looking at it for a second, you can see that these buys weren't by any crazy notion, right? This is when COVID happened, but at this specific point, before COVID was even announced, we were expecting buys from these last sells to buys, right? That's why this happened. And of course, if we went to a weekly chart or even a daily, I think it was perfect. What I mean by that is, take a look at this. The last sell to buy candle, let's highlight that, right? This is the last sell to buy. Let's draw that out, right? Notice where price went. Why is it that price went right here? Was it because COVID was so crazy of a disease that it had to come to a specific point? No, it's because this is where the last bit of orders from back in 2017 were left unmitigated, that they needed to come mitigate before those higher prices are met. And the same thing occurred. We had the transfer of all the sellers and the weak hands into the buyers of smart money, taking that higher, shifting structure, coming back down, doing what? The same thing, shifting, liquidating, and finally, potentially, people thought that they were ready to go higher. No, last liquidation to finally take in the last area, and you would have actually foreseen this liquidation had you understood that this is where they were heading for on behalf of their actual orders. And from there, you had the real moves up. And before you had the real moves up, what do you think occurred in this area right here? If we go to an 8-hour or something of that sort, I bet you we could see it. Zoom out here for a second. This actually was to load for us, right? Let's go look at inside of that area. Well, either way, if this loads, you're more likely than not going to see again that transfer of the buys into of the sellers into the buyers, right? The transfer of the weak hands into the strong hands once again. Hopefully this loads. That'd be fantastic. Like this, maybe it'll load better. Okay, maybe we'll just deal with the daily time frame here. Yeah, sure, that's fine. We're not going to deal with the lower time frame right now, but notice what happened in here. You have the same thing occurring. We left behind areas that counted as demand zones that tapped into previous demand zones to mitigate. And as a result, when we came back down, we didn't just tap in and go higher. We waited for them to show their hands, which was creating liquidity, liquidating that liquidity, showing you that there's a prerogative to go higher, finally shifting institutional structure, not candlestick structure, right? Coming back down right to where the last sells before the buys, mitigating those last orders. And again, what do you think is happening in here? Another accumulation before real higher prices are met. So the purpose of this video is to show you that yes, they can see your orders and it fucking sucks, but also you can see theirs. And as a result, you are able to be a participant with them, and you're able to actually read the story of price action. Because anytime there's going to be somebody with more money in this market, right? And there's always going to be someone in the market that has more money than you, then you're going to be able to see this transfer of weak to strong hands, and as a result, be a participant of it. Because once this occurs, the odds of, for instance, this happening become far less, because institutionally they have too many orders that they can't take into negative like that. And as a result, after mitigating even the orders from all the way back here, they are ready for a real markup. And that's when you're met with this. Now, similarly, when we get up here, we begin to liquidate, and we finally have a distribution, right? The distribution becomes a reaccumulation, right? We have liquidations. But at the same time, this distribution was able to create a ton of money for smart money, right? They were able to transfer all these people that were trying to finally sell, right? People were selling, finally liquidated the last people that were selling, and they started to buy, and they began to take those people out at new areas where they were trying to buy, Boom, we break down. What's happening as we break down? People expect selling pressure. As people expect selling pressure, we come back up a little bit, grabbing all those people and buying into their sells, coming lower. Everyone's selling again. Everyone maybe starts to buy, and then even right here, you can see we liquidate the last buyers. Again, spring, right? Taking out the last few weekends in the market that had started to trail or started to move themselves right to the last lows, and then break higher, come to test the last areas of inefficiency and the last sells before buys, and continued higher, right? Same thing up here. Why did this here happen? Why did we begin to transfer the same thing? Why did we begin to transfer all the buyers, right, into sellers? Why were we able to switch weak hands into strong hands to go lower? Well, because we had come into, right, always go and use the higher time frame. We had come into an area where they had done a buy to sell relatively aggressively, leaving behind filled in price action back in 2018, which they were able to close in through all the orders in that area, right? These are all closes of these previous buys to sells, but also entries off of new dumb and weak hands into the sells here. And now we can expect the same thing to occur, right? As we maybe come lower, this is the expectation that I have. It doesn't matter if you don't, but I'm expecting it to come at least into these areas here, liquidating the last few people here, having new people get into what? New sells, undergoing the same type of accumulation, whether that accumulation happens here or here, and continuing to higher prices, okay? And that's like the very long outlook. But you can anticipate price movement and given outlooks in price action using the way that they have not mitigated positions, left behind imbalances and inefficiencies and unfair price action, and as a result can basically be aware of when and how they are going to move from those points. Okay, so hopefully it's made some sense to you guys. I hope you took something out of this video, and I'll see you guys in the next one. Thank you.